Hey traders! Welcome to the Easy Forex Pips YouTube channel. In today's video, I'll be sharing a profitable scalping trading strategy that's simple to follow. I'll be taking you through the steps and explaining every detail, so make sure you watch until the end. In this video, I'm excited to share with you a simple yet powerful EMA or exponential moving average trading strategy that can yield fast and profitable results. To achieve this strategy's high accuracy, I'll be using 3 different length EMAs and an additional indicator to confirm the signals we receive from the EMAs. That will help us avoid false signals and improve our trading performance drastically. To get started, head over to Tradingview.com and select your preferred currency pair. For this video, I'll be using 5 minutes time frame, but you can use bigger time frames if you want. For this scalping strategy, we'll be using 3 exponential moving averages, the 20, 50, and 100 period EMAs. These EMAs act as support and resistance zones, which hold the price within the channel and reduce false breakouts. They allow you to enter trades after the price breaks through the channels. This strategy is based on the trend, price action, and current market momentum. To apply this strategy, go to the Indicators tab and search for the 10 and 1 different moving averages by Himanshu. Select and apply this one to our chart, and then go to the indicator settings. Head over to the Inputs tab and enable MA2 and MA3. Change the type to EMA and change the length to 20, 50, and 100. And then go to the Style tab and change the indicator's colors and thickness to make it more visible in the chart. The reason for using this indicator is that Tradingview free accounts only accept 3 indicators at a time. Using 3 individual indicators means we can't add an additional indicator for signals confirmation. However, this indicator has 10 individual EMAs built in, and its settings are highly customizable. Using 3 moving averages instead of 1 makes more sense. 3 EMAs create excellent support and resistance zones on the chart, which are more accurate than using a single moving average line. With just 1 moving average line, it can be difficult to identify the trend and potential reversal points. Now, let's see when to buy and sell in the market using 3 EMA strategy. Now here is buy and sell conditions. Firstly, we will buy when the 20 EMA crosses above the 50 EMA and the 50 EMA is above the 100 EMA. And secondly, when the price action is above all 3 EMAs and the EMAs are sloping upwards, these conditions indicate a bullish trend or buying opportunity. Here's an example. All 3 EMA lines need to be heading in the same direction and separated from each other, like this. And to open sell trades, we will look for when the 20 EMA crosses below the 50 EMA and the 50 EMA is below the 100 EMA, and when the price action is below all 3 EMAs and the EMAs are sloping downwards, these conditions could indicate a bearish trend or market selling opportunity. Here's an example. All 3 EMA lines are heading in the same direction and separated from each other, like this. But as always, we will try to avoid ranging markets. When the market moves sideways, like this zone identified by the EMA lines, we can see the market heading sideways. So, trading in this condition should be avoided. Also, avoid markets where the lines are crossing each other, like this. Remember, we want the 3 indicators to be in the same direction. Here is a side note, my friends. If you use this EMA trading strategy in a minor Forex pair which are more volatile than a major pair like Euro, USD, you might need to adjust the EMA lengths accordingly. For more volatile pairs, you can use 50, 100, and 200 EMA lengths or more. Let's enter a couple of trades to understand our trading strategy better. To enter a trade, the position of the candlesticks pattern is also play an important role. Look for a setup where the candles are fully outside of the 20 EMA, like this. Once you've identified the setup, the next step is to find our entry signal. Our entry signal is when the price makes a pullback and closes below the 20 or 50 EMAs. In this chart, we have spotted an existing uptrend as shown by the 3 EMAs, all of which are heading upwards while the candles are above them. Next, wait for the price to make a pullback towards the 20 or 50 EMA. This will act as our entry setup. The next step is to wait for the price to go back to the 20 EMA again. Once this happens, take a buy position here. However, if the price goes down and breaks below the 100 EMA, cancel your whole setup and look for other trade opportunities, because this may indicate a potential change in current trend. Now, let's see when to exit from a trade. Let's say you took a buy position here. You want to set your stop loss at recent swing low or the 100 EMA for your profit target. Set it at 1.5 times your stop loss. You can go more advanced with take profit and stop loss points. Like if you set the first profit target is 1 to 1 and the second profit target is 1 to 2. When the first target of profit is hit, you can move up the stop loss to break even and wait for the price to reach the second profit target, so it becomes a risk-free trade. You can re-enter the market when you get another pullback in the direction of the trend, but I would recommend you do only 3 trades in the direction of a single trend, and keep the profit targets low in the second and third trades. Here we can see that the market is currently on an uptrend, as all 3 EMAs are heading upwards and all the candles are above the EMAs. The first step is to wait for a pullback towards the 20 or 50 EMA, but it must not cross below the 100 EMA. Once the pullback happens, the next step is to wait for the price to reverse back up to the 20 EMA. Once this happens, we take a buy position. Then, we set up our profit target and stop loss. As you can see, the price ends up hitting our profit target, so this counts as a successful trade. Now let's look at another example. In this chart, we can identify an existing downtrend, as all 3 EMAs are heading downwards and all the candles are below the EMAs. The next step is to wait for a pullback towards the 20 or 50 EMA, but remember that the pullback must not overlap the 100 EMA. After the pullback, we wait for the price to reverse back down to the 20 EMA, then we take a sell position. Now that we have completely learned this strategy, let's backtest this strategy and check its performance. Okay, the results are in after taking 30 trades was truly amazing, so let's check it out. I used a 5-minute time frame. This was done using a 1-to-1 and 1-to-2 or more risk-reward ratio on your USD chart. There were 24 winners and 6 losers. The win rate is 76%. This is a really good win rate because our risk-reward ratio is 1-to-1 or 1-to-2 or more. The most won in a row was 5, and the most lost in a row is 3. The gain on the account was 70%, and that's risking 1% per trade. That means if you had a $1,000 account, you could gain at least $700 in profit using only one currency pair. The good thing about this strategy is that you only have to risk 1% on each trade. Here are some side notes. In my testing, I found more sell trades than buy trades. And this specific trading strategy works best in the middle of an existing trend. If you want to trade when the market changing its direction and forming a new trend, look for all the 3 EMAs begin to spread from the same point and support resistance zones. It can be a sign of a potential trend change. For optimal results, it's important to combine EMAs with other indicators and tools. These additional indicators act as supporting characters, helping to confirm or validate the signals given by the EMAs. Now, if you made this far, here are some quick bonus tips for you to improve your scalping trading techniques. First of all, don't risk too much capital. You should never risk more than 1% of your capital per trade when you are scalping trading. I suggest risking only 0.5% per trade. Secondly, make sure you're using a broker with a low spread. This is critical because when you're scalping, every single pip counts. Check out our recommend broker link in description below. Finally, stick with 1 or 2 pairs. When you're scalping using small time frames, entry signals appear very frequently, so you don't have to worry about missing entry signals from other pairs. Simply select 1 or 2 pairs that you're comfortable with and stick with it. So, I've just revealed a profitable scalping strategies that you can begin trading right away. All I request in return is 2 seconds of your time to like the video and subscribe to the channel. It only takes 2 clicks, but it means a lot to me. You may also watch my other videos. Thank you for watching, and I'll see you in the next video.